Hey everybody, it's Richard Miller here, and I'm going to do my quick big picture market review looking at the current state of the major indices. On this chart I've got the Nasdaq Composite Index. We've had a tremendous rally from the March low. We're now in the process of testing the 34 day exponential moving average. So these levels are key levels to watch out for. Do expect the Nasdaq to back down a little bit back down to 10,226 level in this correction. Needs to retest support. So these breakout levels here of April and May, these are key resistance support areas now, and I do expect these levels to be tested in the current market rally. As long as the market stays above the 55-day moving average, it's in good shape, and we've not yet had any significant recent distribution days in the Nasdaq. Okay, Nasdaq 100 also looking particularly strong, but also in the process of looking to test the 34 again, and then 55-day maybe down here at the 10,285 level. So watch out for this level. Markets fighting for support at the 13-day moving average, so it'll be interesting to see if the 13 to 21-day, if we will get the rebound. If the market fails through this level, then we're going to 34 and then to 55, but by that time the 55 should be up here at the 10,200, 10,300 level. You can see the equal weighted index also performing quite in line with the Nasdaq 100, so very strong market overall. Turning to the Dow. The Dow hasn't made a new high. Index is struggling. We're in a period of consolidation since the May high here. We're now moving sideways pattern, finding support on the top of the moving averages here, fighting for support of the 13-day moving average, looking for support of the 21-day. If support comes in here, we should see a rebound, but fail that, do expect the market to test 34 and then eventually the 55 back to 26,000, 25,800, back down to that level. And that'll be a critical zone to watch in the market. We've had a few distribution days recently, above average volume selling, so there is a bit of risk in this, downside risk in this market. Okay, and then turning to the S&P 500, up for the year, but still didn't take out the previous high there. Did manage to close this gap in the May high gap region here, and now in the process of consolidating a little bit, and do expect a test of the 21-day moving average on any kind of weakness. So this zone between the 21-day and the 34 would be a nice swing trade entry point for a potential swing. But having said that, overall the market is going to look at going into seasonal weak periods. So from a weekly market perspective, we can see significant weakness to the 13-week and then the 55-week. 3,000 can be tested during August, for example, as the market is moving into a seasonal weak period. But overall, Nasdaq 100 still looking strong. Consolidation risk back down to the top end of the cloud. Sorry, not the cloud. Top end of the moving averages, and looking for the 10,000 level as the next key support level to be tested on this. A healthy correction, much needed consolidation after the significant rally from the March lows. Okay, what we're looking for here is these sell signals here, and if the market dips below the 55-day moving average, then we'll be out of the market entirely, but do expect some test of that level. There is a risk that over the next month that we do test the 55-day moving average in August and September. So there's downside risk in the market. If we look at the sectors, basic materials still looking strong, but also at risk to retest this high here, 1387. Industrials struggling to get out of a trading range, very similar to the S&P index here, finding support at the top end of the moving averages there, potential rebound zone. Technology very well extended. Do expect this index to pull back a little bit to 6,800 to retest this, and that will be very close to the 55-day moving average at that level. So do expect some form of consolidation over the next couple of weeks. Consumer cyclical, looking to test support, the old high here for support, and that can be a potential rebound at that level. We've had a few above average selling days, yeah, so there is a risk in that. And then the financial services, still in a downtrend, price actions below the long-term moving averages, so recovery potential still not clear. Real estate also struggling, still stuck below the long-term moving averages. We've had multiple sell days above average volume selling, so not in a good shape, that sector. Consumer defense took out this higher, and now we can expect that to be retested. Any weakness in the market would be an entry point here at the 21-day moving average and the 13. Look at that zone to be tested as it goes up to there. Could see an entry point for a swing trade at that level. Healthcare, busy coming back, testing 13-day. Do expect a 21-day average test and 34 days, so back here at 39. Do expect some form of a test at that level there. Utilities, just above the long-term moving averages, looking for support there, looking for the 21-day average there as a potential swing trade from the utilities index perspective. Communication services struggling to get past the long-term resistance levels here. You can see there, swing trade from this 55-day average and then back up to the 610. And energy also struggling, still stuck below the moving averages. Long-term downtrend still remain in place, but we are seeing early signs of a recovery as it's bouncing along the 55-day average. As long as it stays above the 55, there's upside potential. Alright, but market to watch is the Nasdaq, to see if we'll see that weakness down to 34 and 55 day over the next week or two. Until next time, happy trading.